Gold is barreling toward a major liquidity zone, and right now, Smart Money is quietly preparing their next move. My primary focus today is a massive long setup targeting the 4370 level, but there is one strict condition that has to happen first. If you don't know exactly where these institutional orders are resting, you're just going to end up as the liquidity. Here's the problem though. Most retail traders out there, they're looking at the completely wrong level right now, and they are about to walk straight into a classic algorithmic trap. Let's break down exactly where the institutions are actually targeting today, and more importantly, how we plan to trade right alongside them.
So, the outcome you need to know before we even dive into the charts is right here. Our daily bias, it remains strictly bullish. The primary draw on price, that ultimate target we're hunting, is the buy-side liquidity resting up at 4370. Now, our hard-end validation level sits at 4270. If price manages to close below that, well, the entire macro narrative shifts. We know the destination, now we just need to map out the entry.
The absolutely crucial point for today is this specific price window right between 4285 and 4295. The primary institutional buy zone is sitting directly inside this 4-hour discount level. Listen, this isn't just some random area of retail support. This is wholesale pricing. This is exactly where Smart Money intends to reaccumulate their long positions before violently launching price back up to our 4370 target.
Let's zoom out to the daily time frame so we can understand the why behind this. Look at how institutions aggressively expanded price straight out of that 4050 consolidation base. By doing that, they completely swept the legacy external liquidity all the way up to our recent highs. So having engineered that fresh high, Smart Money is now just allowing a natural rebalancing to take place. They're deliberately driving price down to siphon off sell stops and rebalance the internal inefficiency before they seek those higher prices.
Now, dropping down to the 4-hour chart, you can see exactly how this narrative builds. Check out this massive, unfilled 4-hour bullish fair value gap resting right inside our targeted buy zone, that 4285 to 4295 range. This open void in price, it acts like a giant magnet. Smart Money routinely hunts down these unfilled discount arrays simply to execute their massive buy orders at a steep wholesale discount.
But here is where most people get it wrong. The average trader is totally glued to the newsfeed right now. Sure, we have weak US non-farm payroll data suggesting a cooling labor market, plus those escalating geopolitical tensions around the Strait of Hormuz. But we do not view these as fundamental drivers. In institutional trading, these headlines are strictly volatility catalysts, nothing more. The algorithm is just going to use the volume generated by this news to engineer rapid liquidity sweeps, shoving price exactly where it needs to go to fill those 4-hour imbalances.
Stepping down to the 1-hour chart, the intraday bearish retracement becomes super clear. The market is purposely pulling back toward that internal discount liquidity. This isn't a crash, it's a highly controlled descent. The algorithm is systematically delivering price lower to rebalance the inefficiencies that were left behind during that aggressive rally, perfectly setting the stage for a macro bullish reversal.
And that brings us right into the 15-minute execution zone. Take a close look at the relative equal lows resting right at 4318.20. This right here is manufactured sell-side liquidity. It is essentially a giant pool of retail stop losses resting directly above our 4-hour fair value gap. And make no mistake, this is the exact liquidity pool that Smart Money intends to attack to fuel their upcoming long entries.
So how do we actually execute this? Remember, we never anticipate, we only react to institutional confirmation. Here is the mandatory 3-step sequence required before you even think about risking a single dollar. Step 1, we must see a clear, undeniable sweep of that sell-side liquidity at 4318.20. Step 2, an immediate 15-minute market structure shift driven by an aggressive bullish displacement candle. And Step 3, we enter on the retracement right into the newly formed 15-minute bullish fair value gap.
Now, if, and only if, those specific conditions are met, here are the precise trade parameters we're working with. Our entry zone sits between 4288 and 4296. The stop loss is firmly placed at 4272, tucked safely below that 4-hour invalidation point. We'll secure 30% of our position at take profit 1, which is at 4318. Then we let the runner go for our ultimate macro target up at 4370. Overall, this setup yields a beautiful, highly asymmetrical risk-to-reward ratio of roughly 1 to 4.2.
But the market is sending us a major warning signal right now. The current status on this setup, it's a hard wait. There is absolutely no valid institutional confirmation yet. Smart Money has not shown their hand on the lower time frames. Look,
capital preservation is your #1 job as a trader. So until that 15-minute confirmation sequence prints clearly on the chart, we sit on our hands. Because here is the scenario that most traders are completely ignoring today. As the London and New York sessions get ready to open, a massive algorithmic trap is being set. You have to ask yourself, where exactly will retail traders get trapped today? The delivery algorithm is specifically designed to exploit emotional breakout-style trading, and I promise you, today is going to be no exception. I really want you to sear this exact level into your mind. 4318.20. Retail traders are looking at this right now as a rock-solid floor of support. So when price inevitably breaks below this level, textbook retail logic is going to view it as a massive breakout sell signal. They are going to pile in, heavily shorting the market, totally expecting a massive dump to the downside.
But smart money? They are targeting something completely different. What we're anticipating here is the classic Judas swing. The algorithm is going to purposely induce those retail shorts below 43.18 strictly to engineer liquidity. They'll sweep those sell stops straight down into our 42.90 4-hour fair value gap. By inducing the retail crowd to sell, institutions instantly generate the exact counterparty liquidity they need to fill their own massive buy orders at a wholesale discount. After that, they'll violently expand price right back up to 43.70. So let's quickly summarize the institutional game plan for today. Our higher time frame bias remains firmly bullish. We are hyper aware of the retail trap currently being set at 43.18.20. Remember, we do not front-run the market. We wait patiently for that 15-minute bullish market structure shift inside our discount array. Once we get that confirmation, we target the ultimate buy-side liquidity up at 43.70, and we execute with strict risk management, risking no more than 0.5% to 1% of our capital.
If you find value in this level of institutional-style market analysis using ICT and Smart Money Concepts, consider subscribing to the ICT Market Theory channel. And if you'd like to trade alongside these exact macro setups, you'll find the FXTM account link down in the pinned comment below. Above all else, stay disciplined, wait for your confirmation, and when it prints, execute without hesitation. The trap is undeniably set for the retail crowd today. The only question left is, are you going to be the liquidity, or are you going to trade alongside the institutions?